And of course, Thursday, July 9th, 2020. So we continue to look at second half of the year and just the nexus between politics and economy, very important. Today, we'll be looking interestingly at a subject around Nigeria and the trilemma of debt, revenue, and liquidity. But first of all, our viewers, apologies for starting a bit late. This was due to some glitches, which we've now brought under control, and we hope you will enjoy this interesting conversation. With me to have this very insightful conversation on the trilemma that I've mentioned, we can call it the DRL, debt, revenue, and liquidity, is Dr. Ayo Teriba, an economist and CEO of Economic Associates. Good to have you on the show, Doctor. Good morning.
Doctor, I know that last time we had this conversation, we looked at the issues of addressing Nigeria's external liquidity, and that becomes a very important issue for the country. Yeah. So looking at from April when we had a conversation now, what have you seen as developments that shows that we are looking at addressing that aspect very robustly?
Right. Well, since our last conversation, during the lockdown, the oil price has lifted somewhat, better than it was, but not as high as it was before the pandemic hit. So it's still not high enough to lift us out of the liquidity, to lift us out of illiquidity. So export revenues are low, government revenues are low, foreign reserves low, and that's beginning to send the exchange rates into a tailspin, as expected. Yes, what has been done, you are saying that what we've done, we haven't done much. Because it's not sitting down, waiting and hoping for oil price to go back up. It's taking steps to unlock revenue and liquidity in spite of oil price being low. As at the time we had a conversation, debt talks talk about what government was going to borrow was still on the table. But I think it's more clear to everyone now that Nigeria is not alone in crisis. You don't expect anybody to start giving you large amounts of loan. Everybody is in crisis. Everybody needs their money. So that illusion that I can eat my neighbor's food, or I can spend my neighbor's money, therefore I don't need to make any effort to get my own money. We have been disillusioned. So it's clear to the government that Nigeria needs to get its own money. So it'll be easier, to muster the political will at this time new revenue and stop the habit with us for decades of just sitting down and hoping to be lucky, hoping that oil price will rise, and then we will act big, and then but oil price after it goes up often comes back down, and then it destroys everything we've been trying to do. So right now is when we need to explore the non-oil, non-tax revenue exports.
The non-tax revenue exports?
Non-oil, non-export, non-revenue. All the illusion government tax revenue, government can raise VAT from 5% to 7.5%. That's supposed to be an illusion now. Yeah, you raised VAT from 5%, 7.5%. You can even raise it from 5% to 50%. Your take will be lower than when it was at 5%. That companies can't even operate, much less get the profit that you can tax. So this is a very good opportunity for us to convince ourselves that the earlier we explore the non-tax, non-oil, non-export revenue options available to Nigeria of government, it's time that we should explore those opportunities.
Doctor, let me come in.
Many developing countries that are yes.
Let me just come in there. Yes. In terms of your analysis and even your outlook reports that we enjoy, the rich reports, something that we take away from your EA, that's the Economic Associates reports that we also have access to, seeing and projections. Since the return to democracy, like you analyzed in your report, 1999 to 2014, we had the windfalls and things were very good. Oil price was stable. We had huge revenue. We had a robust reserve, foreign reserves. So we had fiscal buffers, and this led to economic expansion, financial expansion, and of course stability, like you put in your report. But since half year 2014, when we began to experience oil price shocks in huge quantums, we've now seen that it's more of managing growth, contraction in the financial sector, challenges, instability, and even, of course, growing misery. Today we have 55.1% as data for a misery index, which is not so good for our economy. The narrative over time is that we did not take seriously the need to diversify our revenue as a nation from crude oil dependence. From this analysis, Doctor, I just need to give us one or two perspectives. What are the hard choices we need to take now? We'll now go on to the other aspects of revenue and debts, because as you are aware, we had a situation where revenue to debt became almost 100%, over 90% servicing our debt, and that's the challenge for our country.
Right. I think that was in the second quarter. So given the decline, well, it was in the first quarter. Given the decline in oil prices and the fact that which affected the revenue, the non-revenue projection, and the fact that you had to pay on the debts you are holding, and you even had to borrow more to compensate for the fact that revenue has dropped. I don't think that we face a situation of any hard choice. We don't face hard choices. The choice is actually very easy. You know, it's something that other countries are doing, and they're getting significant amounts of revenue out of it. It's easier than taxation, and it is more certain than oil revenue, and it is cheaper than debt. It's so the fundamental way to look at this, you know, talking about revenue and debt costs, you know, sometimes is the wrong conversation. You shouldn't be talking about anybody's, you know, okay, oil price has collapsed since 2014, you say, which means that our income has dropped, our revenue has dropped. Now, when you face a fall in income, and anybody can face a fall in income, you shouldn't be relating debts or debt service, debt cost to income. Yeah, because if you look at the typical financial statement, a company will have an income statement.
Yes.
The company will have a balance sheet.
Balance sheet.
So it's wrong for you to be mapping the income statement with the debt component of the balance sheet.
Okay, so it's wrong to match that together.
Yeah, to just be talking of debt and revenue in isolation of the other components of the balance sheet. So on the balance sheet, you have debt. On the liability side, you have debt, but you also have equity. So if I have, now when your revenue is down, your debt issuance headroom is down with the revenue, but not necessarily your equity issuance headroom. So Nigeria should think more about raising equity. We have assets. We are very rich in assets, and that's the other component of the balance sheet. So we are talking our revenue first in 2014, therefore we are borrowing, and sometimes our debt was 70% of revenue. So it was 99% of revenue in that first quarter or second quarter of this year. That's the wrong conversation. So your revenue is down, are your assets down as well? You are very asset rich. I don't know any other country in the world that is as asset rich as Nigeria. One, because of our history of oil boom, which we saved little or nothing out of. So it meant we had either consumed the process of the oil boom, or we invested them. And we indeed invested a lot. And much of that investment are lying idle. They are not earning anything into the coffers. So it's a very easy option to turn to your assets in time that revenues are low and unlock liquidity from them.
Okay, Doctor.
There are 4 types of assets.
Yes, Doctor. We'll get to those, that aspect you're talking about, because it's very important. But I just wanted to get your insights on the current economic sustainability plan and the 2.3 trillion naira stimulus. What's your take on that? Is it really hitting? Is the bullet really hitting the target in terms of stabilizing the economy from that, what you've seen in that plan?
Well, the economic sustainability plan is not necessarily for today.
Yeah.
If we're talking about, roads across the 30 states of the Federation, if you are talking of farming, you are talking about things you are going to do, I don't think you can build the roads that you can't. So you are talking about now the crisis that we have on hand. The pandemic has damaged some sectors more than others. I'm not sure doing roads and suggestion of doing farming will be good to make at all times. But at this moment, we need to say more about what COVID pandemic damaged, where it damaged them, and go out and fix those. Otherwise, the negative impact on government revenue in the medium term will be huge. So that's your tax base being eroded.
Yeah.
If the lockdown has destroyed any aspect of the pandemic, whether the outbreak itself or the responses to the outbreak has destroyed any sector, we need sector-specific policies. We need to state how we are going to salvage or address the damage in the real estate sector.
Aviation.
in the hospitality sector, in tourism, in education, and so on and so forth. So rather than, so if you fix roads, will it fix the damage in the commercial sectors? If you cultivate more farmland, is it going to fix? So basically, there's a need for more
sector-specific approach.
That's right, yeah. Speaking more in terms of the companies that have been displaced by COVID and the people that have been displaced by COVID. Otherwise, if you let there be widespread bankruptcies or large spread permanent job losses, is going to erode the tax base long after COVID might have gone.
So what I get clearly is that the ESP should be sector specific. Roads are good.
Many of the things.
Agriculture, mass housing is good. Solar, the digital economy.
Always be good to do. Those things will always be good to do. Okay. But it needs to say more about responding to the crisis. And just being more general.
Let's get this started also to leverage and boost our liquidity. And at the state level, let's start with the subnationals. We've had a conversation with Nasarawa State Special Advisor to the Governor on investment and trade. And he's talked about the fact that the state is looking at commercializing their assets. And that's part of the things you pushed, commercializing non-financial assets. That's optimizing underutilized lands and buildings. We also see that in Ekiti State, there's also the move to look at privatizing corporate assets, where at least they're leasing out much of their control of state-owned enterprises. So they're ready to do public-private partnerships with the private sector in terms of liberalizing their industries and companies. This obviously, like you're saying in your reports, is a way to go, and several states are beginning to take that step. What would you like to say to this trend, and how critical is it in terms of the vehicles and the framework, like the Infrastructure Concession Regulatory Commission, ICRC, headed by Engineer Chidizua, who have already had a forum where they're looking at how they can create that vehicle for public-private partnership for highways and roads, and going forward, strengthening the ICRC to put out concessions and PPPs, which are part of the kind of things you're talking about.
Well, we don't need to, complicate what is a very simple and straightforward idea. We're saying our Nigeria, the narrative is fueled by trying to map debt with income. You isolate equity, you isolate assets. So you're saying the man's income has fallen, but he owns assets that generates revenue from business. His return on his investment, the assets are idle. So what we're saying is, whether you're talking of federal government or state government or individual government-owned firms, you should also map your assets with equity. What is the equity issuance headroom? That you have. We know that you don't have any debt issuance. Your credit risk has dropped. Your ability to service your debt has diminished. It's, if you're already paying 100% of your revenue to pay interest, if you borrow additional debt, where are you going to get the revenue to even pay interest, much less repay the capital? If you didn't come to that realization, you are now being told by credit risk agencies that, hey, look, your debt headroom is gone, but not your equity issuance headroom. And so while we are talking about debt, you look at the developing countries that are doing well. You look at what they are talking about. Like India is the top 10 economy in the world. Is about number 6 or number 7, depending on the exchange rate. They keep changing. Sometimes it will be bigger than the British economy. Sometimes the British economy will be bigger than their own, depending on the exchange rate. Brazil is a top 10 economy. If you go and look, just look at the website of Brazil or the website of India, but our own ICRC needs to move beyond talking. We've been talking for years. In India and Brazil, they passed the stage of talking. They will tell you last year, we conducted 700 auctions, next year we have 160 slated. So they're already looking to generate other people's money to make their assets functional so that their assets can generate revenue that tax cannot bring in, or that Brazil has a little more oil than Nigeria, so that oil cannot bring in. So they don't discuss their, now last year, Brazil got 60 billion from equity.
$60 billion.
Yeah, call it FDI. Yeah, we call it the kind of the one that they are saying they are slating this. They have 170 auctions that they are going to make in 2020. They have 150 auctions that they are going to make in 2021 because it's cross-border mergers and acquisition. That's what's not happening here. And there are such opportunities for others to come and invest in us. As example, they are too few and far between. So they are doing it wholesale. So the door is open. That's how you generate foreign direct investment. The other way is to also attract, so that's what we call brownfield FDI. Then the other way is greenfield FDI. They got roughly half, from both sources. New investors coming in, like the one we generated in the GSM space.
Yes.
We sell an asset, the license to operate, that's intangible assets. Okay, but their operational assets, they have to deploy themselves. Let's join Brazil and India in opening the door to equity inflow. We have most infrastructures, you can, as a matter of fact, all infrastructure sectors, apart from telecoms, the assets there are owned 100% by government. That's, so you got industry, the manufacturing equipment, you're trying to partner with local universities. India has opened that up to foreign investors to come and be manufacturing military hardware in India, in part for domestic use, but also for export. So there are a lot of things you can open up in terms of your corporate assets. We have the pipelines company. We own it 100%. Many foreign investors will jump at the opportunity to come and own a piece of the pipeline companies and inject money to expand the network, our rail. Don't put it, no, don't go for debt that China will give you on terms that you can't even negotiate. Don't go and borrow from China. They open the door to equity investors the way you opened it to NLNG investors, the way you open it to GSM investors, you open the financial system, you open pension management to open up. That's one way of doing it. So you too, India's target is to now be raising $100 billion annually in FDI.
Which is very much.
Brazil gets more than India, and China gets more, nearly twice of what Brazil is getting. So any developing country that is doing well is leveraging on its assets to raise equity. And the other way,
Doctor.
The other way you can generate revenue, which is also as important, is India. The last time, I think in 2019 budget, the component that they raised from idle land and buildings, idle government lands and building, bringing them, leasing them, or rationalizing them, optimizing returns on them, they get 10% of their total budget.
All right, Doctor.
Idle lands and buildings. So Nigeria has a lot of idle lands.
Okay, let me come.
There's the issue of securitizing financial assets, and you've talked about options under that, like issuing foreign currency bonds based on JV operations, privatize corporate assets, and in that aspect, sell up to 51% of wholly owned state-owned enterprise. And third is liberalizing intangible assets. You may break government monopoly, like you were talking about, in infrastructure sectors. And lastly, commercialize non-financial assets, which we were saying that some states are beginning to explore, where they optimize underutilized lands and buildings and assets just to raise capital. So do we take all these four at the goal? What are the top two or three that we should now leverage on, since we now have an equity issuance headroom?
The four are interrelated. You can't partition them and say, this is what I want to do, I don't want to do that. And the basic principle is, first, the whole world knows what you owe. Who knows what you own? What do you own? And that's why some people are beginning to talk about bankruptcy, because they know your debt and they see that your debt is rising. They know your revenue, they know that your revenue is down, and they can see beyond those two. And yeah, Nigeria is bankrupt. Nigeria is heading towards bankruptcy. Nothing can be further from the truth. But perception is reality. So that's in the ignorance of people making such comments. They feel that the world begins and ends with revenue and debt. So it's up to you now to educate the world and say, look, my story is not limited to revenue and debt. I actually own assets. You own assets. Oh yes, I just came out of a boom. And the assets littered. I thought I didn't need them. They are idle. Then they say, so what are they worth? So Nigeria needs to, many countries, or the countries we're talking about, not only know their assets, they have valued them.
So the valuation comes,
and they bring them into the conversation. If we knew our assets, if somebody can access an online asset registry and say, Nigeria owns this, is valued as such, you would not have your debt risk rating downgraded. Because the risk raters will say, look, the revenue is down, but they are rich on assets, so their net worth is still very good. America owes more debt than us. They didn't downgrade America. Japan owes more than us. They didn't downgrade them. Because people not only know about America's income and debt, people also know about America's assets, and they are valued. And they are viable. And so that's what India, Brazil,
Saudi Arabia,
they start to do. So the first thing is, what do you own? The second thing was that, but when you begin to talk about value, it will be debatable. Because if you are the only one, if you don't have third-party
valuations,
no third-party stake, then it's not marketable. So that's where securitization comes in. You will see Saudi last year did an IPO at 1.5% of Aramco, which gave them $26 billion at the time. But the motivation for the IPO is not that they needed 26 billion, is that they needed to establish the value of the 100% of the firm. And once they were able to sell 1.5% at 26 billion, the whole world agreed that at that time Aramco was worth 1.7 trillion. Are we together? So the reason you do securitize, so you might need some of the government companies whose values are debatable. You might need to do some IPO just to establish valuation. And once you do that IPO, if Saudi needs money in urgency, it can issue securities based on their shares in Aramco. It doesn't have to sell. So you can get the liquidity, you can eat your cake, you can have it. So that's why. So Nigerian government first has to start with wholesale listing of government corporate stakes.
Nigerian capital markets.
Wholesale, including LNG. LNG now, our equity in LNG doesn't benefit us because if you say you want to use it to raise securities, they ask you what is it worth. Unless you list it either in Nigeria and maybe in the companies of the other joint venture partners. Once we know the value, you can issue securities based on it and be servicing those securities with the dividends that will come from LNG. But it's not just LNG. I said we own pipelines company, it's a dollar asset, but who knows the value? And so on and so forth. That's one. So that's where securitization comes in. Next is privatization. That the motive for the IPO is not just to establish valuation, but to get substantial amount of liquidity. And there you can be talking about doing up to 50% or 51%. And then the third one is liberalization, in which you can sell the corporate assets that you have, either wholly or in part. But most corporate assets that we own are in sectors in which government has monopoly. But you also bring
pipeline.
Yes, and let investors come and put in parallel investment. And the final one is your idle lands and buildings. Yeah. Most of the barracks that we have, the way you evaluate is a very simple decision to make. That barrack, the land that barrack is sitting on, what is it worth? How much are you generating from continuing to hold it as a barracks or as a prison? Now, if the value in use is less than the market value, you should relocate. You should relocate it to a land that is commensurate with its economic value, and free this space, this prime land, for commercial use. America has a program for turning military bases into great places. They will close military bases and turn them into great places. Britain is relocating all inner city prisons. These are, the world's largest economy, the world's fifth largest economy.
So they're just taking some innovative steps.
If they gain revenue by optimizing their land holdings and building holdings, why can't we? We want to go to India to borrow money from India or borrow money from China, but China is optimizing its land holding. And we still want to keep those idle land idle. So basically, that's the long and short of it.
So in a nutshell,
there's no state in the federation that doesn't have land that is optimized.
In essence,
it's all over that you can optimize. So it's not about talking and talking for years, creating agencies who talk and they don't act. Is that, okay, now with the crisis that COVID has brought upon us, let's have our asset list. What are they worth? And what's our program? Why that, symbolic listing just to establish value, which boosts our net worth. And people stop talking to us in terms of you have to borrow in the Eurobond market at nearly 10% when others are borrowing at less than 1%. I work together. So to boost our own valuation, so our problems are more apparent than real.
Opportunity for us to leverage our assets.
Nigeria is asset rich, and you can leverage on that. And every developing country that are growing fast, that are liquid, that don't have to do, their currency every 2 years or every 4 years, are developing countries that are leveraging on their assets to unlock liquidity from them.
And we'll leave it at that. We have to leverage our assets to unlock liquidity. That's the way forward. It's not gloomy in terms of debt revenue. Yes, we have that challenge, but we have huge, rich assets that we can leverage on. Thank you very much, Dr. Ayo Teriba, economist and CEO Associates, for this interesting conversations on Nigeria and the trilemma of debt revenue and liquidity. Indeed, it's time for us to value our assets, enhance them, and also see how we can leverage on it to address our liquidity and sustainability challenges. Thank you very much.
Thank you.
And that'll be all for the Economy and Politics show today. You can join our website, www.prochange.com, to watch our videos with our news reports and analysis. Join us by 10 a.m. for the market review. Till we come your way again. Thank you for watching. Have a nice time and stay safe.